I think we can start now, right?
Yeah, let me tell you one thing. This session is not going to be covering the entire FEMA. It is going to be basically the single master form, that is forms. So we'll be concentrating only on that. So the questions which are not related, other than this, will not be taken up in this session, please.
Good morning, everyone.
Good morning.
Today's topic is very different. Honestly, FEMA, we have already taken this issue of FDI, capital account transactions, and the process. But today's topic is very specific for filing and the process and compliance and practical difficulties faced by the company secretary in that compliances. And that's why today we are having with our panelists from Kotak Bank. And of course, our own Mr. Bala is there. I'd like to formally introduce, thanks everyone, but I'd like to formally introduce to our panelists. We have with us Mr. Parth, Associate Vice President, Kotak Mehta Bank. And he is in banking industry, Kotak, 2013. Total work experience of 10 years. And he is an area manager managing Mumbai for Priority Business Banking. And he is with postgraduates and master in business management. He has done a bachelor in information technology and from IIM Lucknow in customer relationship management. Welcome, Mr. Parth. Thanks for your timing.
Yeah, good morning to
Mr.
all.
Alok Sharma.
Yeah, good morning.
Mr. Alok Sharma. Yeah. Mr. Alok is MBA in banking and finance, having 5 years experience in capital account transaction and overall 12 years in banking industry. Mr. Vikash Sharma, welcome.
Good morning.
He is, good morning, MBA in banking and finance, having 5 years experience in capital account transaction and overall 10 years banking industry. Thanks a lot, Mr. Parth, Mr. Alok, Mr. Vikash. Of course, I like to appreciate the presence and attendance of Mr. Amit Joshi, Senior Manager, Transaction Banking Counselor for Truth, FX, CMS, Kotak Bank. He worked with ICICI and Yes Bank with total experience of 5 years. Welcome, Mr. Amit.
Thank you, ma'am. Thank you.
We have with us Mr. Sayan Chakravarti, AVP, Mumbai Head of Transaction Banking Counselor. Welcome, Mr. Sayan. And we have Mr.
Thank you. Good morning to all the participants.
Thank you. Mr. Saurabh Dani, AVP Mumbai Head for Product Solution Manager. Welcome, Mr. Saurabh.
Good morning, team members all.
Yeah, good morning. We have with us Mr. Milind Gokral, Chief Manager, Senior Priority Relationship Manager. Welcome, Mr. Milind.
Yeah, good morning, everyone.
Yeah, he has been with banking experience of 14 years and in trade and business banking field and working as a senior relation manager with Kotak Priority Business Banking since last 6 years. Welcome all. And of course, Mr. Bala, thanks a lot for your time. I'll just request the panelists to say a few words on the topic on the foreign investment and the compliance. And then we can start the topic looking at the paucity of time. As Mr. Bala is already informed, Mr. Bala will also say a few words on the topic, and then Neel, you can start the presentation. Today's topic will be concentration on the compliance of these forms and your queries. And you can ask any questions in your chat box. Please, so far possible, make the questions short and crisp. That will help the panelists to answer. Yeah, welcome. Over to panelists, Mr. Parth, please, and then Mr. Alok, and then Mr. Vikash. A few words on your topic. Thanks.
Yeah, very good morning to all. And I think the topic is a very practical topic, which, as you, Dipti, rightly mentioned, in terms of the practical and filing difficulties that as a CS you guys face. So I have Mr. Vikash and Alok and other my senior colleagues with us in terms of guiding it across. And any questions that you guys have, more than happy to address it. So yeah, over to you guys in terms of taking this forward.
Hi,
And again, good morning to all of the participants here. As we all are very aware that foreign investment reporting and management and the firms portal has been introduced in 2018. Before that, there is a portal called EBIS portal, and before that, in 2015, the RBI takes the firms and the FDI reportings manually. So to eradicate the effects of this manual reporting, because there is a lot of documentation involved and the time delay, a lot of time delay happened to get the one transaction process. So to ease out the process, RBI has introduced in 2018, July 2018, Firms portal. And nowadays, all the types of 9 reporting is being happened in Firms portal. So we are here to have just elaborate a discussion and have a conversation for all whatever the difficulties which you practitioners are facing while doing any firms reporting, and as a part of the AD's role and what the AD will have views, because sometimes there are a lot of questions being arise that these documentation has not been asked by the in the master in the forms manual, but the same is being asked by the banks, and there are a lot of other problems being faced for filing of firms reporting, where we will be able to discuss all the points, and we'll try to cover all the points and try to resolve all the queries. Thank you.
Yeah, thanks, Vikash. Hi, everybody. This is Alok Sharma here. So basically, we look after the capital account compliance at Kotak. The 3 major products which we usually handle is the FDI, ODI, and the ECB. And also we do handle LO, BO, and PO transactions. So today, majorly we will be covering the part of FDI related today in this session. I think everybody is aware that recently on 22nd August, the old ODI regulations has been changed. It has been replaced with ODI rules and regulations 2022. For this, we recently had a discussion with RBI. There are a lot of things which needs to be clarified from RBI side. We already had a discussion recently with RBI. All the banks went for a one-day workshop. We have another workshop in this coming week. So I believe that all the banks by end of this month, or you can say by first week of September, they will be well versed with the new ODI guidelines. So after that, we can have, you can say, a fair discussion on the new overseas investment rules. So fine, we would appreciate this being a very interactive section. So as you are you can say the face of the customers. The customers are basically into business, but you and your teams basically help them in the compliances related to capital account. So it is very important that you guys, whatever queries you have, you can discuss with us. So we will try to whatever best solution we can give or whatever best answers we have, we'll try to address.
Thank you. Mr. Bala, 2 minutes on the topic. And then Neel, you can start.
Good morning to all of you. As you're all aware, FEMA is a very, very vast subject. In a period of 2 hours time, we cannot cover everything. So specifically today, we are concentrating only the compliance part of it through the online, that is the digitalization. As you are aware, India is moving towards the digitalization with the transparency and the disclosures. So doing the right thing is very much important. If we don't do the right thing, if we don't do the compliance rightly, even delayed, that will attract the heavy penalty on the company and its directors. While doing the online, we should do the things rightfully, having what are the documents which are required, what are the difficulties we are facing. As some of the panelists said, Master Circular says something, when we are doing it, we discover something else. So these are all the things which are there in the nitty-gritties. Today's presentations basically taking you, really speaking, through the online portal and actually giving the practical overview of the thing. How do we go about it? What are the difficulties we are facing? What preparation we are required? What sort of the things we will come? So from the partisan, we expect from their experience, from their difficulty, they can check with their clarifications, question, etc. with the panelists. With the expert panelists in the respective field, we'll be able to have their better practical experience from them, which will facilitate for us to do the better service to the clients. That's all. Let us go ahead with it. Neel, your presentation, please.
So first of all, thank you very much, Dipti ma'am and Professor Bala sir, for your continuous guidance and support. I thank you all the panelists present here for the valuable time. And a special thank to Ashwini ma'am for providing me this opportunity. I also welcome all the enthusiastic participants who are present here to gain some knowledge or some value addition. So as you know, FEMA is such a huge topic, as Bala sir already said. It cannot be covered in 1 or 2 sessions. So in continuous object of Mehta and Mehta to spread knowledge, we have organized multiple FEMA webinars, including on FDI, on foreign contribution, and on compounding under FEMA. Today's topic is focusing mainly on the post-compliance requirement part once the company receives FDI. As you know, for the foreign exchange transaction, the governing body or the regulatory body is none other than RBI, Reserve Bank of India, and RBI regulates the transaction of the foreign exchange. And in order to, for the ease of doing business, RBI has established a portal, Foreign Investment Reporting and Management System, in short FIRMS, which provides a facility regarding the filing of FDI transaction or foreign exchange transactions. The FIRMS portal was introduced in July 2018, which mainly focuses on the filing compliance, post-compliance requirement once the company receives FDI. So RBI has introduced a single master form with an object that will consolidate some of the forms which are related pertaining to foreign investment. So in total, there are 9 forms starting from FCGPR and FCTRS, which we will discuss in depth today. Other forms include LLP 1 and 2, CN form, that is called convertible note form, exclusively for startup companies. Then a DRR form, INVI form for investment vehicle. There is an ESOP form also, and DI form that stands for downstream investment. So these 9 forms are available on the FIRMS portal. But basically for the companies, we will focus on FCGPR and FCTRS. So before jumping into the filing part, let's us understand how the FIRMS portal works. Before the company want to file the form, there is a prerequisite, a 2-step process, you can say. First, the company has to register itself as an entity user on the FIRMS portal, and then next as a business user. So let's just understand what is entity user and what is a business user. So entity user is a person authorized by the company basically to register itself on the FIRMS portal. It is mandatory for all the companies who have received foreign investment and the foreign investment reflecting in their balance sheet as on date to register as an entity user, irrespective any type of foreign investment coming or not. If previously in past also company has received FDI, then it need to register itself under the entity user on the FIRMS portal. So this is mandatory. So entity user is a entity specific. So generally a director or CS is authorized by the company to register itself on the entity user. So only one person can be the authorized person to act, and for more than one entity also it can be possible. But generally director or CS is authorized to act on behalf of company. It is registration is entity specific. So once the company gets registered, it cannot do a multiple entity user registration, and it's entity specific. This is mandatory for all the companies who have received foreign investment till date, or which are in planning to raise some foreign funding. The process is very simple. First of all, entity has to authorize a person, generally director of the company or company secretary, by an authority letter. Also with the authority letter, the PAN card of the entity user, that is director or the CS, it should be self-attested. Here, PAN card of the company is not required. RBI is not asking for PAN card of the entity or company. It is basically asking PAN card of the authorized person. It is processed at the RBI level. Generally, all the forms are processed at ED bank level, but this EU registration entity user is processed at RBI level, and generally within a 48 hours maximum, your registration gets approved. Or for somehow reason it is not approved, or there is no such status you can check, then you may contact the help desk. There is a mail ID, help forms, you can contact them. This is a basic process for EU registration, which is a prerequisite before filing the forms. This is just a brief detail how it looks like. The company has to enter the authorized person details, their email ID, their PAN numbers, and the type of company. Here, important part is the register office. A company's register office, wherever it is situated, based on that register office, the jurisdiction of RBI's regional office is governed. So the address should be proper. So based on that, the regional office of RBI can be selected. And once you attach this authority letter, RBI will approve this within 48 hours. So once the company gets registered as an entity user, the next step is it has to fill some basic details in the master data. Master data is nothing. It is a general information asking by the RBI that what are the company's basic details, incorporation, their PAN number, etc., etc. So this should be filled. Here, main tab is regarding foreign investment. As I has already told, the companies which have already received foreign investment or which are planning to raise, they need to register on the entity user platform. So foreign investment, the shareholding pattern of the company as on date should be reported under this third tab, foreign investment detail. These are basic details company need to fill up. Mainly the NIC code is important here, the object for which the company is established, and if there are multiple objects, then main object under which the company receives the funding. Apart from them, there are foreign investment holdings company need to give till date, how many issues company has made in terms of private placement or right issue, whatever, the whole details should be filled up here. So once the company get registered as an entity user, now the next step comes for reporting purpose. So for reporting purpose, there is another, you can say ID, business user registration requirement. Now let's understand what is business user. Business user basically is a person who is required to make the filing on behalf of the company. As entity user, credentials are entity specific, but business user can be any person, any entity, any individual who is required to file. Onus is on the person who is required to file the form. It has to register under the business user category. So BU in short can be any person which is specified under FEMA to report a transaction. Again, if a person wants to act as a BU, he must register himself, and with that authority letter, I just give a format for that. RBI is specified. Yeah, so this is basically a format, standard format, which is used for authority letter. Here, the company to authorize a person, generally director or CS. Along with that, main detail is the AD Bank's IFSC code. IFSC code is very important because upon this IFSC code, the processing here is at the AD Bank level. The entity user registration was at the RBI level, but the business user registration is at the process at the AD Bank level. So correct IFSC code of the AD Bank, relevant bank should be entered. Then
just Neel, 1 minute. Participants, today's session will be more concentrated on queries. So be free to put the queries. We have expert on the panel. So we have to have some basic presentation. So Neel is doing. But today you can ask the questions you have and we'll cover all the queries. Kotak Bank, all our panelists has agreed they will answer all queries. So please be free. We'll cover maximum time to query only. Okay, Neel. So our target is that everyone query gets solved. Thanks.
yes.
Yeah, go ahead.
Yes. So process for business user registration is same as for entity user. There is no such difference. same PAN card of the authorized person need to be attached along with the authority letter. Here it is processed at AD Bank level. The timeline is same. Generally within 1 to 2 days, the AD Bank approves the registration. Here as such, there is no such board resolution required apart from authority letter. So this is a prerequisite before company want to report the transaction of FDI. I think it is clear the process for registration. So now let's just focus on the governing laws which regulates the foreign investment in India and the filing part. So mainly the Foreign Exchange Management Act, which governs the FDI. Apart from that, the Foreign Exchange Management Non-Net Instrument Rules notified by RBI in 2019, which also prescribe a brief process. And another regulation is Foreign Exchange Management Mode of Payment and Reporting of.
Can the panelists take up the queries?
Yeah, yes. Please go ahead.
So there are 2-3 questions in the chat box.
Yeah.
Bala.
So Vikash, can you just say
Yes.
the message, the query from Prakash Kedekar that can a company have
there
more
is
than
a-
one at
there
the
is-
same time?
Yes, as per the chat box, I think the first query is related if the investor and remitter are different, then what additional compliances come into the picture? When investor and remitter are different, then there are 2-3 points required additionally, that we require the KYC of both investor and remitter in a RBI prescribed format for covering all the 6 points. And addition to the KYC of both the remitter and investor, we will also require a letter from the NOC type letter from all the concerned stakeholders. Like remitter will say that I do not have any objection in allotment of shares in favor of the beneficiary, in favor of the investor rather than me. And they will also explain the relationship between the investor and the remitter. And the investor will also in turn say that, yes, I am getting these shares on behalf of, while I have remitted the funds on with the name of so-and-so, because there is this relation, mentioning the relationship between investor and remitters. Nothing else.
What type of relationship would that be allowed in case investor and remitter are different? Because that is not given in the FAQs.
Yes, there may be justifiable relationship, like sometimes whenever what I feel that shares has to be allotted in the name of nominee, and the funds, because the actual beneficial owner of the shares is overseas company, the company, so they may mention the director and the relationship that these shares are being allotted in the name of nominee. However, as because of the requirement of the requirement in Companies Act. And also,
so does it depend from bank to bank, or it is a standard thing RBI has prescribed?
No, RBI has not prescribed any relationship details. However, the justifiable relationship will suffice the purpose. Like suppose if husband and wife are sending the remittance, and wife is sending the remittance, then husband is getting the shares, then the same will also suffice the purpose. Sometimes the parent company sends the remittance and the shares to be allotted in the name of a subsidiary, then also that suffices the purpose.
Okay, thank you.
The company shifts its registered office. Is there a facility to amend the entity user form? That is another question.
The any detail in the entity form can be easily amended by quoting a mail to RBI at helps.firms.org.in. The mail ID has already been clearly given in the presentation itself by Neel, and the same is also mentioned in the forms manual. You have to write a mail to RBI. The same, any detail in entity master can be amended by providing the supporting evidence to them.
Somebody wants to know the difference between the green field and the brown field. Please explain.
Greenfield and brownfield is just like a new project and the existing project. If investment is coming in the existing project, then it will be as a green brownfield. And if the investment is coming in a new project of a company, then it will be greenfield.
Can a company have more than one AD?
In FDI, there is no concept of AD. Like in ODI cases, when the a particular UIN is allotted to a particular AD, and the other ADs cannot do any transaction in the UIN which has been allotted to any other AD. But in FDI, there is no concept of AD. You can get the remittance of any in any AD and get the reporting through any other AD. But as a practice, more of the banks have such policies that if they are getting the remittance, then only they will handle the compliances. This is their internal arrangement. However, as per the RBI norms, there is no such restrictions. But bank there have internal policies. They want that we will report the compliances only for the cases for which they are getting the remittances.
Also, another question is here: how to change the shareholding in the entity master if the whole foreign shareholding has ceased to exist when they are transferred their share to the new foreign shareholders?
Sorry, I couldn't get you.
Bala sir, I think as I already said, for entity user, once you register on the portal as an entity user, there is a specific type of master data in which you can update your shareholding pattern without filing any forms.
Okay.
So filing is different. For that is a business user requirement, and for updation of shareholding pattern, you need to log in on an entity user registration.
Okay. Form ODI is replaced by Form FC. Please throw some light on this form.
As you all are very aware that Form FC, Form ODI, these all things have come in a very recent stage, like on 22nd August, the things have been published, and all the things are in a discussion mode. We have gone through the Form FC, but before throwing any clarity, give us at least some time to go.
Yeah, correct. You said it in the beginning. Actually, it is still the discussion stage. We need to discuss.
Yes. RBI has also taken the calls with all the ADs on 25th August, and they are again taking, because there are a lot of confusion with the new policies, and that can be covered in a different session that will be much beneficial before commenting anything over the same in today's date.
Okay, noted. Whether FCGRP is required to be filed for share application money received from foreign investors in case of the IPO and FPO?
In IPO, there is no requirement of filing of FCGPR. While in FPO, I think there is a requirement. I'm not very sure. I have to go through on this point. But in IPO, I am very sure that there is no requirement of filing of FCGPR.
Yeah, Vikash sir has. I agree with Vikash sir. For IPO, there is no requirement, but if the promoters are selling their share by OFS method, offer for sale, then for that reporting is mandatory under FCTR.
Yes, OFS, then definitely the form FCTRs will be required. But for FPO, we have to check up the things.
Do we need to file one FCGPR for multiple entities subscribing in the same preference issue?
No. If the date of allotment of shares is same, then multiple entities can get the reporting in one FCGPR form. Even they have the different type of capital instruments. Suppose A is subscribing for equity, and A is also subscribing for CCPS. B is subscribing for equity. Means these all options are available in the form.
If an employee was foreign employee at time of the grant of the option, however, at the time of the allotment of ESOP, the set employee of Indian employee, do we need to file form FCGPR if payment remittance is done through NRE account?
Yes, because as per the RBI norms, once the FDI will always be treated as a FDI till the repatriation of the FDI. You cannot say that at the time of allotment of shares, someone is non-resident and then he became resident, then there will not be filing of resident to resident transfer. Yes, the filing, because the ultimate intent of that filing of these things is to get the RBI's record updated for making balance of payment of the country. And for making balance of the payment of the country, if something is already recorded as a non-resident, to knock off that amount, the reporting is the only way out to knock off that particular record from non-resident to resident. And without these reportings, this cannot be done. So if ESOP form has already been reported by the non-resident, then it has already been included as in a diluted equity on a diluted equity basis in the entity master data. So the same is required to knock off only after filing of FCGPR. And in particular this case, the funds are also coming through NRE account. That is also, and the funds from NRE account will always be treated as a FDI. Only the NRO funds can be treated as a domestic investment. I think Rohit is asking some query. Rohit has raised his hand.
Hi. Hey, can you hear me?
Yeah.
Yes.
Yeah. So what we have noticed at time of filing certain form FCTRS, there are already some forms in queue, and then till those forms are resolved or either approved or rejected by AD or RBI, no other applicant can file another FCTRS. So is that correct system logic, and are ADs able to convey this to RBI that because of this single filing mechanism, a lot of other transferees or transferors who happen to be domestic parties in a cross-border transfer case are stuck, and which leads to a heavy penalty later. So what is a way out to sort out this problem?
The point is very valid, sir, but this issue has been raised by certain companies earlier also to RBI, and we have also done certain meetings with RBI at the starting, because this issue now at the starting has been very popular, that what I can do, that the another investor is already filing the form at the portal. So what RBI replied in one of the meeting with RBI, I myself have gone through this matter, and what RBI replied, that RBI said that system is a computer. They have to calculate the things in a same way. There is no such mechanism, because the shareholding pattern, which is the last requirement to be for all the data to be get by the RBI. If at the same point of time 2 applications will be received at the portal, then how the shareholding pattern will be updated. So this is the technical requirement. Without this cannot be happened, because now everything is automated. They do not do anything with related to the shareholding pattern. Once application which is in the processing stage, once the same is updated, then only the shareholding pattern will be updated. And for getting the another shareholding pattern to updation, it is mandatory requirement to update the initial shareholding pattern. So until and unless if the earlier application will not be processed, it is not easy for computation as a technical term get both the transaction process on the same day or the same time. Because आप अगर देखेंगे वहां पर तो एक पोर्टल में पेड अप कैपिटल की डिटेल्स पूछी जाती है, एंड द परसेंटेज वगैरह वो सब उसी से कैलकुलेट होता है. सपोज there are 2 applications moving simultaneously, and one will be rejected, and the data in the second form will dependent on the first data in the first form. Then the entire calculation will get disturbed. So this is the reason, and this cannot be done.
So I agree that it has to be processed sequentially, but our only submission was if RBI can at least allow submissions of the form, they can process in a sequential manner. But today the system is designed in a way that it doesn't even allow uploading of the form. What we wish to represent through AD, and I request if you get a chance to speak to RBI, if you can put up our view that at least allow us to file the form, right, and give us that acknowledgement that yes, papers have been submitted. Today, filing a form itself is a challenge, which leads to a lot of compliance questions and under various audits, right? And the only thing we try and show is that while we attempted filing the form, we got a message that certain other filing is pending, and hence we are unable to file it. Explaining this to those who are already aware about it in terms of audit process, it's fine, but then there are situations where it becomes difficult to even justify why we are unable to file this.
Rohit, we totally agree, and we will try to communicate it to RBI office. However, as per my practical experience, it does not seem very easy, because to change a platform, it's a because RBI has come up with this platform after so many years, and they have also done this thing in the EBIS portal. That portal is also required certain corrections, for which this forms portal has been introduced by RBI. So it is not very easy for RBI persons also. However, we will definitely communicate your point. But the actual thing is this: that investee company already knows that what are the filings are in lined up. So they have the sufficient time, 60 days, and RBI has very strictly mandated to the banks and every other checking authority that form is either to be approved or rejected within 3 working days. So RBI has a strictness on that thing, that any form which has been filed by the company, the same is required to be approved or rejected within 3 days. So this problem can be solved by investing company also for not waiting for the last moment.
You've got a very valid point, because normally what happens, people actually do the things in the last minute and we experience a problem. I think as a professional, we should try to avoid that. And in spite of there is a problems are there, as you rightly say, the matter can be represented to the RBI how best they can help. Because our side also, we should do our homework in time, I think. Okay, we go to the next one. In case of the dissolution of a foreign subsidiary company in India, is it required to give an intimation to the RBI in the entity master of the Indian company has been dissolved?
Sorry. Yeah.
In case of a dissolution of a foreign subsidiary company in India, is it required to give any intimation to RBI that the entity master of the Indian company has been dissolved?
I understand that this is regarding liquidation of an Indian company, correct? Yeah. That in the liquidation of the Indian company, whether the EMF is required to be updated or not. Yeah. Yes, it is required to be updated. Although the form FCTRS reporting is not required to be made. However, the EMF data is required to be updated for the dissolution of the Indian company, because suppose the accounts is closed, Indian company is dissolved, and everything is liquidator has liquidated the company, proceeding has already been shared with the overseas shareholders, but still the RBI records has not been updated. In RBI record, at every point of time, this will show as a foreign entity and this will show as a subsidiary of the foreign entity. So it is required to update and get the entry deleted from the EMF through the form, through the FAQ number 9 mentioned in the RBI forms portal FAQs details.
Neel, I think there is a question for you. How to change the business user details on the master form?
Sorry, sir.
How to change the business user details in the master form?
Which detail?
And sir, I will handle the question.
Yeah.
The business user details, I think there is no option, but there is no restriction for making business user details. If some employee has been left out from the company, another business user can be created in the through the AD, like whatever the AD they want to choose, the business user can be, new business user can be created.
You need to register afresh. For business user, there is no restriction. For entity user, it is a specific to entity. So that can be a register afresh.
Yeah, business user, you can register afresh. I agree with you. Yeah.
Yes, because I have also faced certain queries like email IDs has been changed or something like that. So the same can be modified by registering a fresh business user.
Correct, you're right. User manual states that the SMF is processed at the AD bank level and not RBI level.
Yes, sir, it is correct. The filing form is processed at AD bank level, but subject to if you are filing within the due time. For FCGPR, there is a prescribed time limit of 30 days. If you are filing beyond 30 days, then it will goes to RBI for approval along with the late submission fee. So if you are filing within the due time, then definitely AD bank has discretion to approve or reject.
Is this practically correct? What are the issues where the SMF is actually reviewed by RBI and not by AD bank?
Sorry, sir, I couldn't get it.
What are the issues where the single master
It is for panelists.
Yeah, is reviewed by the RBI and not by the AD bank?
Actually, RBI has delegated its powers to review the form.
Yeah, AD bank is actually
when everything is in.
Yeah, AD bank is nothing but an extended arm of the RBI.
Yes.
Because
yes.
everything is done to the AD bank only, because we directly do not deal with the RBI directly.
Yes.
So naturally, it is a delicate authority by RBI to AD bank, I think so.
So anything which is not allowed under automatic route, because RBI has clearly said that the forms is required to be reported within 30 days from the date of allotment of shares. And suppose the shares had not been allotted, the reporting had not been made within 30 days from the allotment of shares, then AD does not have power to approve it. So we have to refer the case to RBI. Practically, there is no such difference between the checking of the documentation by AD or by RBI, because AD also have to check all the parameters like RBI. Only the difference is this: RBI will calculate the details here and details of LSF, because RBI has provided a solution for not going into compounding session only for the delay rather than just paying the LSF. So RBI will provide us the condition that you may approve the case. The instruction is to the AD only, that AD is advised to approve the application, provided this is a conditional approval to be based upon for the payment of LSF by the company. So there is no other effect. However, this may be a point that RBI may ask certain queries. This depends upon person to person and RBI official, because in AD also there are some persons that they do not want any query on a particular topic, but another official can want to clarify anything. Sometimes RBI, however, it is very rare. Sometimes some RBI person may ask that please provide this document to clarify this point. Otherwise, there is no difference between the checking by AD or RBI.
Is UAN registration requirement there like it was in the EBIS, or we can file directly FCGPR?
Yes, you can file directly FCGPR. Now there is no requirement of Annexure 6 reporting. I think you are asking for the Annexure 6 reporting, ARF reporting, which was earlier in the manual and the EBIS portal. Now the FCGPR reporting is only the single reporting, which is required to file for FDI investment.
It got merged, sir. Previously in EBIS, it is correct. There are both type of filing. For once the applicant receives the foreign currency, then it need to report in ERF Annexure 6, and also FCGPR need to be separately filed. But with the introduction of firms portal, only a FCGPR is sufficient.
If FCGPR is filed within the stipulated time limit of 30 days, but stands rejected due to technical lapses, RBI will levy additional fee for violation of the FEMA?
I couldn't get this question.
Yeah, if I can answer this question. So the query is that
just explain the question to panelists.
Yeah, ma'am. So the query is that, sir, the applicant has filed the form within the due time of 30 days, but for some reason the form got rejected due to some maybe attachments are not there, whatever the reason. So now the RBI is taking a fresh filing, and it is taking as a delay, although company has made the initial filing within the due time and charging LSF.
Due to technical error, any file has been rejected. It seems like very rare to me. I have not gone through any such case where due to technical error, any form is rejected. It might be the case where a document has not been attached in the FCGPR. So any application which does not have any supporting document or is completed in all aspects, the same will be treated as a non-submission. So yes, RBI will revise the LSF on the same. If attachment has been forgotten by someone and then the document has not been attached within 30 days, and then the next application the same has been attached, then it will be treated as a non-submission only.
If the querist want, he can unmute and clarify what is exactly, because you have said technical mistake. So what exactly, if the querist want, can unmute and ask the question and clarify, or we will go ahead with another question.
Dipti, I think the query is that the company.
No, I think wait, Neel, let the querist ask that.
Okay.
And querist is present.
He is from Prakash, Kotak.
Mr. Prakash, I think he's not there. Okay, fine, we can go ahead.
Yeah, so is there next query?
Yeah, I'll read. Which is the effective date of filing the form FCGPR, actual date of the receipt of the money by AD Bank from foreign country, or date of the IFRC, which is important date. This is important date because banks delay is actually based on FIRC for want of the FEMA procedure at the branch level.
First of all, FCGPR reporting is not based upon the date of remittance receiving. FCGPR date is based on date of allotment of shares. Within 30 days from the date of allotment of shares, the form needs to be reported. Now, coming to your query, it seems like you are asking that from the date of remittance received, from which date of the remittance, the shares to be allotted, because as per the FEMA, the shares to be allotted within 60 days from the date of remittance received. Suppose you are getting remittance today, then within 60 days, you have to allot the shares. The shares has been allotted on 60th day. Then you have the next 30 days to report it to RBI. If you have allotted the shares on the first day, then you have only further next 30 days instead of 60 days to get the application reported at forms portal. Now coming to the question that FIRC issuance date does not matters. Remittance receiving date in your account matters. Like if you have received the remittance on so and so date, from the date of receiving the remittance in your account, the timeline has been started. And for issuance of FIRC, generally all the banks, what I have experiences, all the banks issues FIRC within time. Only the point these type of cases is stuck when there is a transfer from some withdrawal mechanism, like funds received from overseas Citibank to Indian Citibank, and then it has been transferred to Kotak. Then really it's difficult for Kotak Bank or any other Indian banks or any bank which does not have received the remittances directly, because they have to coordinate with the other bank for getting the FIRCs issued. So sometimes in such scenario, the FIRC issuance got delayed, but the timeline will be started from the date when the amount hit in your account.
Saurabh here from Kotak Bank, from the sales side. Normally, what we do with the clients, we suggest them in SWIFT field number 70. You can mention, you can instruct the overseas party to mention that this conversion should be from the Kotak Bank side. Like in case we suggest that, so no intermediary bank will not convert that fund. Like normally we face such issue with the Citibank, HSBC Bank, who transfer the money from the US to their Indian subsidiary. They convert these money and do the further RTGS and NEFT to the respective Indian bank. So what instruction you can give to the overseas party that at the time of the sending the remittance, make sure to add this small line in the SWIFT that conversion will take place at this particular bank only. So no intermediary bank will touch that remittance amount.
Remittance from NRE account used to be reported and the remittance from NRO need not be reported. Is this correct?
Yes. Remittance from NRE is required to be reported. I come on this later on, but I'm coming first that whether remittance from NRO is need to be reported or not. Yes, the same is need not to be reported because the remittance from NRO account will be considered as a domestic investment only, because in NRO the proceeds can only be received from the earnings and a non-resident is getting from the Indian earnings. So the NRO proceeds will be considered as a domestic investment. However, when the remittance is coming from the NRE account, then it may require to be reported, may not require to be reported, depending non-resident wants to get the reporting done on a repatriation basis or a non-repatriation basis. Suppose if an NRI wants to invest in an Indian company on a non-repatriation basis and they are remitting their funds from the NRE account, then there is no requirement of reporting the form FCGPR or FCTRS, whatever. But if NRI wants to invest on a repatriation basis from their and the proceeds are from their NRE account, then it is required to be reported. It depends upon the repatriation point, not on the point of NRE and NRO.
Okay. Whether the valuation report is to be recorded in case of the first subscriber deposit money as per their commitment in MOA in the time of incorporation.
The valuation report is required in case first subscriber deposits money as per their commitment in the MOA at the time of valuation is not required in the case of subscription as per MOA, because as per MOA the company is new, the company cannot have any valuation at that point of time, and as per MOA it is clearly mentioned that so and so shareholders will receive the shares at a face value of INR 10 rupees, or generally in India the face value is INR 10 rupees. So valuation will not be required only in case of when subscribers are getting the shares issued as per the MOA.
Okay. Next is a humble request to Mehta Mehta to team to email the FEMA PPT. Yeah, it is always done at the end of the session. It is actually disseminated to all the participants, the registered mail ID and as well as the phone number. You will get it actually PPT also, recorded session also. That is the normal practice. And the next question is, unfortunately, effective date of the filing is the date of the remittance and not the date of the issue of the FIRC, which makes us 1 or 2 weeks if intermediary bank in India is actually involved.
Yes, Saurabh sir has addressed,
that we have discussed actually now.
yes, Saurabh sir has already addressed this point that it is very easy to include a line, so not involving any intermediary bank in such transactions. You can directly get the remittance converted in the final bank.
In post-merger case, if my CCDs are being issued by the transferee company, do I need to take the valuation of the transferee company, and will my per unit price is to be calculated on the basis of per unit price will be calculated on the basis of the valuation of the transferee company?
As per my understanding, in the post-merger case, there will be an NCLT order which will confirm that how much CCD to be converted with how much equity of a new company. And at the time of getting this NCLT order, you have to submit the valuation report itself.
Yeah, so you are absolutely right. In case of the merger, this order very categorically says what is to be done, what is the thing. We will have to go by the order, what is actually issued.
Yes, so there will not be required any for further valuation because the same is already included at the time of issuing the NCLT order.
Correct. That is right. When the scheme is mentioned, but finally the order mentioned what is required to be done. You are right. Absolutely, you are right. Do we have to select the AD bank as per the list notified by the RBI?
It does not mention where you have to select the bank. Like at the time of creation of business user, or what? You may clarify the point.
Does the CA statutory auditor need to submit only a remittance of arriving at the share price, or submit the complete supporting document?
The CA has to submit a complete valuation report showing the calculation, how they arrive at the share price value, what method, what international method they have used for the valuation report. The CA has to submit a complete valuation report, and CA has to specifically mention that they are mentioning the share per value, value per share on which date, as of date, because sometimes what we are noticing in various applications that CA is using the data of 2021 and providing the fair value per share as of date 31st March 2021, 31st March 2022, and the valuation is being issued today, then that will not suffice the purpose. We require the value per share as of the date which is not more than 90 days old from the date of allotment of shares.
SME FAQ is actually pertaining to the rectification of the incorrect entity master details. Further, rectified details need to be certified by the prescribed authority. After dissolution of the company, it will not be existence. In this scenario, how can the entity master be rectified?
Voluntary liquidator will be the authority. Liquidator will be the authority who can sign such documents after dissolution. Because at the time of remitting proceeds of an liquidated company, also all the documents has been signed by the liquidator only. For that, the liquidator has already been appointed by the company before starting of a winding up process.
And the next one is NSF calculation takes a lot of time. Till then, form is actually pending for the approval. Can we represent the RBI to process and expedite? It take almost 20 days to approve. till then, our other filing is stuck up.
I do not agree over this point. It may be a experience from 1 to 2 cases where 20 days RBI, because RBI did not take such long time. Sometimes some specific cases may take time, wherein there may be some issue like RBI has some particular point. Otherwise, RBI generally approves such cases 1 to 2 days or maximum by 3 days, 3 working days. In general, in 80% of cases. However, certain RBIs, like in RBI Delhi, if you will go for the in RBI Delhi, they do it very fast, and other RBIs also do it very fast. Sometimes there may be a case like if a particular case has taken 20 days. So LSF calculation is not a very very tedious process. The same can be calculated by company or by the professional itself. Just and they have to go by the formula given in the reporting master directions.
Okay. Davani Jain, would you like to say something on this? Because since you are mentioning,
yes. Yeah, so our firm did not approve the LSF and it was showing pending for approval since 20 days, and we were unable to file our DI filing. And then later the DI filings were also subject to LSF. So we constantly chased Citibank, our AD bank, but they also said that it is up to RBI.
Ma'am, there may be a possibility that form has been pending at AD for some time, then for RBI at some time. But RBI, in a normal course of cases, RBI did not take 20 days. However, I am not in a position to comment on the working of that particular case. I am just giving this statement as a normal.
So it was a right issue FCGPR filing, and like we had experienced 3 times on this.
Ma'am, then you may have to take it up with your AD, and the same may be raised to RBI, because in the Kotak and other various banks, which I know personal level, these type of things comes, but very rarely. And in your case, in every time in all the 3 cases it has been happened, then you have to take it up with your AD.
Yeah, you know to license with the AD only, and then you know to take it the RBI, you know to get it sorted out. That is not the only thing which can be done in this.
Mr. Kalani has raised their hand, I think.
Is there any kind of the resubmission given by AD to correct the applications in case of any discrepancy?
No, resubmission is not. There is no option of resubmission in FCGPR in forms portal. Yes.
Is optionally convertible redeemable preferred share be considered to be an FDI?
These optionally convertible redeemable preference shares issued after 2007 will not be considered as the FDI. The shares which has already been issued before 2006 will be considered as the FDI.
One major difference that differentiates.
Sir, I think Mr. Kalani is raising his hand.
Yeah, okay. Yes, Mr. Kalani, go ahead.
No issue, we will move on the next one.
One major difference that differentiates a NRE account and NRO account.
The major difference is this, that in an NRE account, the earnings are received from the, which has been received from the overseas earning. In the NRO account, the earnings and the proceeds is being received from the earnings received in India. This is the major difference.
What are the reporting requirements on CCDs?
What are the reporting requirement for CCD?
Yeah.
All other reporting requirements will be same as for the equity. Only the CCD. There are 2 more requirements. First, there is one declaration that the CCD, the issuance of the CCD will not be less than at the fair price. Fair price of shares at the time of issuance of CCD in future, and upfront the conversion formula and the conversion ratio should be decided by the entity, and the terms and these terms and conditions should be either part of different separate term sheet signed by both the investor and investee, or as a part of board resolution. Nothing else.
Question for Kotak team. Remittance and the investor is different. Will the investor directly send the KYC to the beneficiary bank through MT 199? Please enlighten on the process of generation of the KYC by non-remitting investor.
Yes, the investor directly sends the KYC to the MT 199. They may connect with the AD to get the details of the SWIFT message, like there is a particular code of Kotak Bank. Suppose I am taking it as an example where Kotak Bank needs to receive the KYC from the overseas investor. Then they will connect with the RM, PSM, whoever is involved with them from Kotak. They will get the details, and the investor will contact their overseas bank to send a beneficiary bank to send the details as per the prescribed RBI format, and that overseas bank can directly send the this KYC. Okay. Yes.
Yeah. So Prathamesh, AD and your current Indian banker can send reminders and requests, but ultimate sending has to be happen from the overseas party for the required details as required.
Is there any difference in the reporting documentation requirement of the equity share and the CCPs?
Similarly, as I have said for the CCD, that there is no much difference. Only the upfront, the conversion ratio and conversion formula is required to be disclosed upfront at the time of issuance of CCPS, and the pricing guidelines that at the time of issuance of CCPS, the conversion will not be less than at the price of the shares at the time of issuance of CCPS. Nothing else.
Which are the documents apart from the board resolutions, valuation certificate and the FARC we need to attach while filing the FCGPR, for instance CCDs? Issuance of CCDs.
Ma'am, to revert this point very specifically, we have a certain list of documentation we may share. However, prima facie, not very specific. I may say that FIRC, KYC, BR, term sheet, which will mention the conversion ratio and conversion formula, and board resolution can also have that terms in their the valuation report, and if there and the declaration from over the shareholding pattern, whether because in a Kotak we have a practice to take this declaration that the shareholding pattern which is showing in the entity master form is true and correct as per the details of the company. And I think there is no other document required.
What is the validity of the valuation report as per the RBI norms?
90 days from the date of issuance of shares.
That is all, I think, all the questions we have taken now. Neel, I think you can proceed with the presentation. Then we'll take the further questions as and when it comes. As of now, there is no questions.
Yeah, thank you, sir. So coming to the FCGPR part, FCGPR stands foreign currency gross provision return. So let's understand in which situation it need to be filed. So whenever an Indian company receives foreign investment, whether in terms of indirect investment or FDI, but issue of equity instrument, the person resident outside India, then it need to file the FCGPR form. Let's understand the meaning of equity instrument. Here, equity instrument does not only include equity shares, but it also includes CCDs and CCPS, that is compulsory convertible debenture and preference shares. As Vikash has already told, if the CCDs are not compulsory convertible, maybe it's optionally convertible or NCD, then it will fall under the ECB category, and the said issues should not be reported here. So it should be compulsory convertible, then only it will amount to equity instrument. Otherwise, ECB reporting should be made. Now, let's understand FDI. FDI, as per the non-debt instrument rules 2019, it defines any kind of investment through equity instrument issued to the person resident outside India by unlisted Indian company. So if a private limited company issue a single share only to the non-resident, then it amount to FDI for the unlisted company. But for the listed company, it is not so same. For listed company, a minimum amount of 10% of the post-issue paid-up equity share capital calculated on a fully diluted basis, then only it amount to FDI. So it is important to understand the terminology post-issue paid-up capital on a fully diluted basis. So fully diluted basis, that means all your outstanding shares, considering all the future conversion that will happen by CCD or CCPS, whatever. So here should be noted that if you have issued ESOPs or convertible notes, then that part should be calculated along with on a fully diluted basis. Then only amount to a FDI for a listed Indian company. Next is timeline. So due date is.
Sorry, can you please explain that again? Honestly, I didn't understand what's the difference. Why 10%? So what happens if it is 9%? Is it not FD?
Yeah. So for a listed Indian company, if someone residing from outside investing less than 10%, then sir, it will not amount to FDI. It will amount to FPI, foreign portfolio investor. Because in an unlisted
investor is not a SEBI registered FPI.
Then it will be considered as a FDI only. For FPI investment, it is required to be registered at the SEBI.
Correct.
And this is only for the listed entities, not for the unlisted entities.
No, sorry. So my question is, suppose if it is a non-SEBI registered entity, it's not registered as an FII or a FPI,
yes,
but it is investing 9%.
Yes.
Post-diluted. Then what are we saying? What is the category of investment?
FDI. It will be FDI only.
It is still FDI.
Yes.
Understood. But if suppose SEBI registered FII or an FPI invests more than 10%, then even if it is coming from a SEBI registered entity, it is considered an FDI.
Yes.
Okay, got it.
It's simple rule that for FPI and FDI, more than 10%, everything is FDI. And there is a definition given in the NDI rules, like FDI में भी 10% होना चाहिए शेयर कंपनीज के शेयर, या फिर उस सीरीज में जो शेयर्स अलॉट हुए हैं उसका 10% से ज्यादा होना चाहिए, तो वो FDI की कैटेगरी में आएगा. Otherwise, everything is FDI only. And for unlisted company, even they are getting 1% shares, everything is FDI.
Understood. Thank you.
Yeah. So moving to the due date. The company should file the form within 30 days from the date of allotment of the equity instrument. Here, the burden of filing is on the Indian company which has issued the equity instrument to the non-resident person.
As the panelists already said here, if you are receiving a remittance, you have a time for 60 days of allotment, and you have another 30 days to filing the form. So much will depends upon what is the time period you have to file the form, depend upon what is the date you are actually allotting the share.
Correct, sir. So once money gets into the company's account, from that date, 60 days will be calculated for allotment. Yeah. And once the company allots the share, then 30-day timeline starts.
Yeah, that is right. The time clicks only when you allot the share, the 30 days starts.
Correct.
Yeah. Okay.
So let's understand a brief process how to file the form FCGPR. Once the company gets registered as a business user, then FCGPR is mainly divided into 6 parts. Let's understand. First is basic details about the company, like name, PAN, SIN. Here, 2 important things is their entry route and sectoral cap. As per FEMA, there are prescribed for the sector-wise entry route and sectoral cap. Suppose being a pharmaceutical company, if I am receiving a FDI, so for that there is 100% sectoral cap is there. However, in that there are 2 categories. Approval route is up to 74%, and if the limit crosses the 74, then only required government approval. So while selecting here entry route, it should be selected based upon the limit. Whether my limit is exceeding 74%, then I should select the tab government route. Or if it is up to 74% and automatic route, then I should select the automatic route, unless the government route. And further, the sectoral cap should be selected based upon the maximum limit allowed by the government as a FDI. So for a pharmaceutical sector, there is 100% FDI is allowed. So it should be selected, not taking into account whether it is under approved, it is 74%. Because most of the clients I have seen, they select the sectoral cap based on the approval route. No, that is wrong. You have to select based on the maximum limit allowed by the government. That is 100%. So this should be keep in mind. Then if the investment is coming for a specific project, then it should be selected. Second tab is regarding your issue details. So date of issue will be your allotment date. Second is there are various types of corporate action through which the funding can be raised, like preferential issue, right issue, bonus issue. Here, yes, in bonus share, as we know, there is no money coming into India. Although it is a foreign investment and the company need to report the CA transaction by filing FCGPR for the bonus shares. MO subscription, as already told. Merger amalgamation. In merger amalgamation, it not only include the domestic merger, it also include cross-border merger. So if by a cross-border merger, I'm bound to file the FCGPR, then the CA reporting should be made here. Then conversion of convertible note, that is for a startup company. Then is share issue to the foreign venture capital investors. Upon excess of ESOP option, FCGPR is need to be filed. Sweat equity is also covered. So this is a various corporate action that is covered under FCGPR form. And if you are issued any partly paid up share or any share warrants, then you have to quote the initial FCGPR reference number. Next is regarding shareholding pattern. This is a very important tab that the form asks for. It says whether change in shareholding pattern due to this transaction being reported has already been accounted in the pre-transaction shareholding pattern or not. So if a company is filing a regular form on a real-time basis, then here company should select the tab no, as there is no such pre-transaction shareholding pattern in which this transaction get covered. So if the company select no, a tab will open for the post-issue paid up capital. And based on that post-issue paid up, your post-issue shareholding pattern will be calculated. So if a company is filing a form on a regular basis, on a real-time basis, then it should select no, and then post-transaction will be calculated based on the reporting. However, if a company is filing a past transaction form, a late filing of form, which was not reported earlier, then it is already in the pre-transaction shareholding pattern once it has registered as an entity user that we have discussed earlier. So companies should select yes here so that there is no change in shareholding pattern. There is no duplication of shareholding pattern. This should be keep in mind while filing the form.
There is a question is here. When convertible notes are actually converting into the equity shares, are we required to file Form CN again along with the FCGPR? Asking this question because in Form CN, one of the purpose mentioned is conversion of CN.
Alok, would you like to take this up?
Yeah.
Parth, I am taking it up.
Okay.
I think there is no requirement. You may use the tab of Form CN because on the conversion of share, on the issuance of shares from the conversion of CN note, it is required to mandatory for filing of FCGPR. You may also check the FCGPR details where it is mentioned the type of issue. So in the type of issue option, you have to choose the this issuance is with regards to conversion of CN. So FCGPR is mandatory to file. However, the same is also mentioned in Form CN. I agree with your point, but I think that tab is not enabled if you will try to use the thing. And Form CN has already been acknowledged by RBI, so it is not required to re-report the Form CN.
There's another question is there. The participant says still confused. As a company, do we need to file FCGPR through entity user or business user?
Yes.
Business user, sir. For reporting purpose, it is a business user. Entity user is just regarding shareholding pattern updation. If you want to file form, then business user.
Yeah, correct. You are right. Actually, in the beginning only you said actually entity user is actually a registration. Reporting is coming under the entity user. So business user. So they have to file it through the business user only.
जमीश मैं आप में इसको फर्दर ऐड करना चाहूंगा that entity registration is for getting the details updated at the RBI record. Every entity is required to update the entity details through entity user. Every entity. And the business user is only for the reporting.
Okay. He said thank you.
Okay, Neel, go ahead.
Go ahead.
One another point I would like to point out is that regarding the conversion of convertible note and once the exercise of ESOP, these are the two convertible instruments for which company to file FCGPR. But if a company has in the past issued CCD or CCPS and it now get converted into equity share, for that purpose there is no such FCGPR reporting required. So CCD, CCPS we are already initially filed. So at the time of conversion, there is no such another form is required. But for conversion of convertible note and ESOP, you need to file FCGPR. Yeah, moving forward. The third tab is the foreign investor detail. You have to basically describe from which country the investment is coming and the type of issue, corporate action. If, as you know, if the money is coming from the land border, that is Bangladesh, Pakistan, or any China, then you have to already in advance take the government approval before filing FCGPR form. Then particular of issue, type of instrument, number, face value, issue price you need to enter. Here, if you are filing the form for CCD or CCPS, then keep the face value as blank. Otherwise, it will be treated as a wrongly in the shareholding pattern. So if you are filing for a CCD, CCPS, then keep the face value 0. Then mode of payment, as Vikash sir already said, it can be through NRE account or FCNR account or a normal banking channel also, or in case of swap of instrument also. The next one is for the payment purpose, what documents are required. It is a very important part because the most of the forms have got rejected because of the wrong filing of the documents. So there are multiple mode of payment through which you can invest in the company. So first is regarding through normal banking channel, inward remittance. For that purpose, two main documents are required. One is your KYC of the non-resident and another is your remittance certificate, FIRC. Investment is made through NRE account or FCNR account, then the debit statement. If you are investing through escrow account, again the debit statement, FIRC is required. For swap of instrument, a valuation certificate is required from the valuer. Here valuer means either merchant banker or category 1 registered with SEBI or the chartered accountant, cost accountant in practice having 10 years of experience. Here the IBBI registered valuer are not recognized as a registered valuer under FEMA. This should be keep in mind. The merchant banker and CA and cost accountant are recognized as a valuer. And if you are investing through NRO account, as Vikash sir said, the earnings are from India only. It will be treated at par with Indian investment, domestic investment. So no such filing is required. This is the exemption given if you are investing through NRO account. I hope it is clear. Now, sometimes it happens that companies raise money for X amount and due to some foreign exchange rate fluctuation, the companies raise some excess amount. So in this situation, what happens? So if my total amount of inflow is in excess of the equity amount that I have raised, so company has 4 options. Either it can utilize for the subsequent allotments if the investing is in tranches, in phases, or it can already have used in the previous allotment, then it need to be mentioned with the reference number. Otherwise, company need to refund the amount, or it can keep the amount also, but based on there is a criteria for that. So if the company has received the excess amount up to 0.5% of this total amount of remittance, then it can keep it with itself, and within 60 days it has to allot the shares. But subject to the 0.5% amount is not exceeding 10,000 rupees. So maximum cap is 10,000. If my excess amount is more than 10,000, I need to refund it. Further, apart from FEMA, companies that also specifies that if the company, once the amount is received by a company, it need to allot share within 60 days. So if I'm keeping the excess amount, I need to allot the same within 60 days. Otherwise, I have to refund within next 15 days. And if this process is violated, then it will be treated as deposits. So there are both violations under FEMA also and under Companies Act also. So it is advisable to refund the amount instead of keeping with yourself.
In cases the remittance is delayed for beyond certain exigencies, emergencies, etc., within the time limit, due to unavoidable circumstances, not fault of the person who's remitting it, then there is a procedure to approach the RBI, explain the circumstances. RBI will actually permit to remit the money in the extended time, which actually should be done. Then again, that has to be taken up through the authorized dealer only. Authorized dealer, you have to make a necessary application and approve the RBI and get the approval, and it can be remitted.
It depends on case to case, sir.
Yeah, that is right. That is what I said in the beginning. It is exigencies beyond the control of the person who is remitting it in such cases only.
Correct.
That is what I am saying actually. If it is the genuine reasons, yes, it will be considered. Yeah. Suppose, for example, you want to remit the money. There is a continuous strike of the bank for 15 days. Banks are not functioning. So what can you do? You cannot do anything.
Yeah. Next part is regarding attachments. This is a very important part.
There is one question also in the chat box.
Excess amount allowed to be retained rupees 10,000 or USD 10,000.
INR 10,000.
INR 10,000.
INR 10,000 it is. It is not USD 10,000.
One thing I just want, I struck my in mind just now. Everything in FDI is related to INR only. Sometimes what we are facing that as a AD, what major obstacle we face, that agreements has been prepared in dollars, especially in
very much right.
Transaction.
Very much right. Very important point you mentioned.
Yes. So since this is an Indian entities instruments, so it is required to, everything is required to be maintained in INR only. Any mainly in share transfer agreement, although the money to be received from the overseas investor, but the overseas investors money to be received in equivalent INR value, and the share purchase agreement is mandatorily to be prepared in INR only. Otherwise, sometimes what I face that agreement has already been prepared, everything has been executed, and at the end point it has been said by AD that no, this agreement will not be acceptable because the agreement is required to be maintained in INR only. Then at that point of time, it is very much not easy for revise the agreement. So this is just a platform, and you guys are definitely helping the companies to handle such type of requests. I request you to maintain the currency in INR only to avoid any last time hassle in making the reporting to RBI.
Yeah, and what happens because the exchange rates keep on changing. So what you are writing consideration will have different impact because, but your end, you should fix what is the INR. So in our country, we have to fix that, yes, this is the amount. That helps us. Otherwise, there is a contingency and all that. That's always, you rightly, this is very important point. I agree. Thanks. Yeah, Neel, go ahead.
Yeah.
But Neel, you have to expedite. It is now 15 minutes left. Huh? Yeah.
Yes.
Yeah, very right.
So next is the documentation part. So there are a couple of documents that need to be attached along with the filing. One is declaration from the business user in a prescribed RBI format. Then a certificate from the company secretary, if the company have, otherwise from the PCS that the company has complied with all the FEMA procedures. Then a NOC or you can say authorized representative authority letter is required. Here valuation certificate is the most important part. valuation should be, as already said, from merchant banker or a C or cost accountant. But here there is an exemption. If the company issuing a right issue, then company can declare that on a very plain paper that the shares are being offered at a price which is not less than to the price offered to the Indian investor. So basically, if the company give a declaration on a plain paper that we are not issuing share less than the price offered to Indian investor, then it is sufficient as a valuation certificate. For that, no such separate valuation is required. This is exemption given in line with the Companies Act also. Then
I have a question here, if I may ask.
Yeah.
If a FOCC, which is an Indian registered entity with more than 50% of, let's say, foreign holding, if that entity is buying certain unlisted company shares from a resident Indian, then how will the valuation rule would apply? Am I still then need to purchase at less than the valuation as if I'm a foreign purchaser, or the valuation is not applicable to me?
No, valuation will be applicable and you have to adhere the pricing guidelines.
Because so pricing guideline is what? Like I have to buy less than the fair market value, right?
No, you have to buy. The resident individual is to sell the shares at a value more than the fair value per share. You have to buy the shares at more than the fair value of shares.
Even if he is also resident, I am also resident just because I am FOCC.
Yes, FOCC is as good as an overseas company.
Got it. Okay. But then
every rule which will be applied to the FDI will also be applied on FOCC. RBI has clearly said anything which cannot be done in their master direction, anything which cannot be done directly cannot be done indirectly.
Understood. Okay, thanks.
There is a question is appearing. If the excess amount is actually received more than 10,000 rupees, we need to refund the same within 60 days. And the investing company declared that they will allot equivalent share to the investor and retain the and refrain from the refunding the money. Can this be done? Yeah, it will be discussed actually.
Refunding can also be done. Allotment can also be done.
Yeah,
the timeline is 75 days.
Yeah, the timeline has to be maintained. Subject to the timeline, either you allot or refund.
Yes.
Yeah. Go ahead, Neel.
Yeah. So next, some documents are required is the board resolution for allotment. Then the FRC and KYC are must. There are some common reasons or mistakes you can say that the applicants make while filing the form that should be avoided. As I already told that form FCGPR or any filing under forms portal is processed at AD bank level, subject to your filing within the due time. AD bank can also uses discretion to reject or approve the same. So generally what happens, most of the client wrongly mention the FRC and KYC format, which is already prescribed by RBI under the user manual. So it is advisable to go and just go through the user manual and attach the document as per the prescribed standard format. Sometimes FRC and KYC details are not matching with the attachment or as mentioned in the form. So this should be keep in mind. Sometimes the serial of FRC is wrongly mentioned. In this, sometimes what happens, the constitution of the entity, structure of entity is wrongly mentioned. So this are, although it's a small type of mistakes, but due to that the form gets rejected as there is no such part of resubmission here. So this should be keep in mind while filing the form. What are the consequences if you are not complying within the timeline? So if you are filing the form with a delay or you are not filing the form, so at the first instance, once the company crossed the prescribed limit of filing, then the same goes to the RBI for approval. And RBI gives a conditional approval that the company should submit the late submission fee within 15 days. And also if RBI thinks with that delay is due to some negligency or there is a long delay for more than a year, then it may ask for a compounding also. So it is based on case to case, how much delay the company has made. So this should be keep in mind. So most of clients, what they do or understand, once the RBI approval is we have received that, yes, this is the conclusive evidence of the approval. No, they have mentioned in the remark part, it is a conditional approval subject to late submission fee and compounding application. So this should be keep in mind. This is a structure how the LSF is calculated. It is prescribed under the FEMA non-net instrument rules, that if my total amount involved in the reporting part is up to 10 million rupees, then I have to pay a 0.05% LSF, subject to a limit of 1 million rupees or 300% of the amount involved, whichever is lower. And if the total amount is crossing 10 million rupees, then the LSF will be 0.15% of the total amount involved. And it is important to note that the LSF will be get doubled every 12 months. So if I'm not complying with the timeline, the percentage will get doubled every 12 months. Minimum LSF is 100 rupees. And the formula is also given in the user manual, so that you can also calculate the LSF.
There is a question, is there actually valuation certificate is from statutory auditor or any chartered accountant? I think it is chartered accountant, not statutory auditor, any chartered accountant. Yeah.
It should be in practice.
Correct. Practicing chartered accountant.
Yes.
Employee chartered accountant cannot obviously certify because they are the insider. Yeah. Go ahead.
Yeah. So this is a part of FCGPR. Now, FCTRS, in which circumstance FCTR is required. So FCTR is also very important filing. So whenever there is an Indian company share gets transferred by non-resident to the resident, or vice versa, resident to non-resident, then FCTRS comes into picture. Here due date is very important. For FCTRS, due date is 60 days, either from date of receipt of fund or transfer of the equity share, whichever is earlier. So although I have not received the fund, but my share get transferred, so from that date I need to file the form. The event date will be either remittance of fund or transfer of equity share, whichever is earlier. The main part in FCTR is that the liability of the person who will file the form. Onus of filing is on the resident. Form FCTRS shall be filed in the following situation. First is if a seller is a person resident outside India and holding the share on a reputable basis. And if you transfer the share to a, again, non-resident holding the share on non-reputable basis, then here filing should be made by the transferee, that is person who is holding share on a non-reputable basis, and not the transferor. Second scenario, if I am transferring a share being a non-resident to a resident, then definitely resident has to file the form. So onus of reporting is on the resident prima facie, transferee. And if I am a holding share on non-reputable basis, being a non-resident, I have to file the form. There is an exemption for filing this FCTRS form. If the transaction seller is the holding the shares on a non-reputable basis, and if you transfer the shares to the person resident in India, then there is no such filing required, as there is no such outflow of money. So this is a exemption given, subject to it is a non-reputable basis. And if I am buying selling from the secondary market on the stock exchange, and definitely the non-resident has to file the form, as the other party is a stock exchange. So the non-resident has to file the FCTRS form. Is there any doubt here?
Yeah, I have a question. Are we, I mean, for listed instruments, do we need to file DI FCTRS?
Definitely, sir.
If the transaction between a resident and the non-resident and vice versa, if the transfer takes place, naturally it will not track.
But what I understand is it doesn't fall within FDI, and these are secondary market transactions which are anyway getting reported as a SEBI mechanism.
That is right. Again, he brought the issue though. Reportable basis or non-reportable basis, that makes the difference. Because if it is a reportable, if it is a reportable basis, the foreign outflow money happens. No.
Okay, but what we understand is FIIs do or through their domestic depositories have to file certain form on a immediate basis, I think on a same day basis or 1 day basis. If that form is filed, then FCTRS is not required to be filed. Is that understanding correct?
May I know who is speaking?
This is Rohit here.
Hi, Rohit. For this FII and FPIs, if they are getting the transaction executed from the custodian bank, you are talking about their depositories called custodian bank. Then the custodian, it is the responsibility of custodian bank to report to the RBI. And in that point of time, then that point of scenario, there is no requirement of filing of FCTRS. That will be taken as a separately. That will not come under the category of FDI. However, if an individual, suppose I am quoting an example here to elaborate you, if an individual has received ESOP shares, and while ESOP, the Indian company has filed the ESOP reporting and form FCGPR at the time of issuing of shares, and that individual is having his shares with some broking company, and if the broking company is selling those shares on instruction of that individual, then it is the responsibility of that broking company. However, it does not have any role in it whether broking company will file or the overseas individual will file the form FCTRS. But in general cases, on a practical basis, overseas seller, since they did not file the FCTRS, they authorize broking company, and the broking company on behalf of the overseas seller files the form FCTRS at RBI portal for the form of CTRS. If still there is any point, you may ask.
Yeah, I have another question. For a purchase and sale of listed instruments, whether form DI needs to be filed. If say there is an FOCC, or if there is a FII or an FPI, if they acquire certain securities on a listed market.
If FII and FPI are getting shares of an Indian company, then they will acquire through the custodian bank. Now, right. Coming to the question, if an Indian company is acquiring shares from a listed entity, correct?
Correct.
From a stock exchange, then whether the form DI is required to be filed or not. Then, yes. If they are having shares of an listed entity also for more than 10%, then they are required to file the same.
Because of the earlier discussion we had on 10%.
Yes.
Correct.
And if they are getting shares in unlisted entity, then whether they
one share or another, they have to file.
Yes.
Understood.
The limit doesn't apply. Yeah.
Got it.
Yeah. Go ahead, Neel.
Yeah. So Vikash sir rightly said. Most of the transaction, what happens if the overseas investor sells the shares on a stock exchange, and generally authorize the SEBI intermediary or trading member or custodian to file the form. So moving forward, what are the documents required for FCTRS? The main document is your transfer agreement between buyer and seller, and the consent letter between buyer and seller to purchase hold the shares. If the transaction is through stock exchange, then the contract note you can attach as a reference instead of transfer agreement. Valuation certificate is must. Then a declaration as per RBI format is required, and also along with that, the initial FCGPR number or FCTRS number, as the case may be, also need to be quoted along with the filing, and the remittance certificate. Apart from this prescribed document, some ED bank, it also asks for a income tax form 15 CA and CB that is related to the remittance and the TDS requirement. So this should be consulted with your AD bank first before filing the form, because they may ask some additional documents based on the case-to-case basis.
Yeah, invariably they ask the income tax file returns. That is there. Yeah.
Yes, sir.
Yeah.
So while filing the form, there are some basic points that you should keep in mind to avoid any kind of rejection. As it is a web-based form, on a firm's portal, every form is a web-based form. So you need to refresh the form every 10 to 15 minutes by saving as a draft the facility is available. Otherwise, the site may get crashed. The maximum size of attachment is 1 MB, so you need to comprise the files in a way that it is although visible but within 1 MB. And at the time of login, you should not copy paste the password, because it will not take the copy paste. There are some minor details that the applicant should keep in mind while filing the form in order to avoid any kind of inconvenience. Yeah, that's it from my side. If any questions are there, then we can discuss.
As of now, there are no questions in the chat box. All the questions have been actually answered so far. And I think, Neel, you have very, very precisely, nicely covered this particular topic, giving the procedural issue and the practical things. My sincere thanks to all the panelists, because they have shared their practical experience in today's session. In fact, more of the interaction between the participants and us. So we spend most of the time in answering the questions and clarification, etc. Personally, I am enriched to a greater extent. I'm sure the participants also would have largely benefited to that. I really take the opportunity for expressing my sincere thanks to all the panelists, and Neel especially for nicely presenting it for your good presentation. And also to all the participants who has actually interacted. And I'm very sure this is definitely one of the knowledge addition session on this particular complicated subject.
Thank you all the panel for your valuable inputs and time.
Yeah, just one thing. Thank you, Mehta Mehta, as a company to allow us to be part of this session, and we thank you. Hope the answers from Vikash as in person especially has been truly enlightened to everyone, and small queries that has been discussed, and small nitty-gritties that are important for filing. So hope that are answered, and we look forward for anything else required from our side. We're more than happy to support. And
excellent knowledge you all provided with your expert presence and your practical experience. Definitely it is a knowledge addition to all of us, which I must acknowledge receipt at this stage. So can we close the session if there are nothing further? Yeah, I don't see anything is there. Everybody is happy. Most of the people are actually thanking. And some of the people are asking PPT. Yes, as I said in the beginning, the PPT will be shared in the registered email ID, and you will also get the recorded session. Please to everybody. Thanks a lot. I think we can close the session with this. We are well in time today, I think so. Thanks, Neel. Thanks, participants, once again.
Thank you, Bala sir. Thank you, Vikash sir, all the panel.
Thank you all.
Thank you very much.
Thank you. Bye.
Have a great weekend. Enjoy your time.
Thanks, everyone. Thanks, panelists, for being here. Thanks a lot for your everyone participation. Thanks, Kotak Bank, for your support. Thanks, everyone. Thank you. Thanks a lot.
Thank you. Have a great weekend ahead.
Thanks,
Bye.
Dipti, to you, especially for selecting the opt topic. That is the thing.
Yeah.
You thought of the good topic. So especially I must thank you also for this.
Yeah, it is Ashwini Namdar, my partner. She was very clear that no, madam, there will be a lot of questions and there are many queries. So we should have this session. And that's why specifically we had it. And that's why I said full freedom and time to the questions only.
So thoughtful, so thoughtful. As we have seen, we have spent most of the time in answering the questions only today. People have got a lot to ask.
Yeah, it was one of the most interactive.
And sir, we can see the dedication of Dipti ma'am. That she is in Aurangabad, she is busy, but still she is in the webinar. Thank you very much, ma'am.
Thanks a lot. Thank you.
We'll see you in the evening. See you in the evening.
Thank you. Thank you. Thank you. Thanks, everyone, please.
Thanks a lot. Thank you so much.